All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off again with the SP 500. Very interesting this week. So we talked last week about the potential for a cycle pivot, some type of downside action, and we got that on Monday. Although, again, as we discussed the possibility of it being, it was a very shallow move to the downside, or at least a brief move. It was a pretty deep cut to the 50 moving average, but it was short-lived. Now that doesn't mean the market's out of the woods yet. I think that this market's still very long in the tooth, and I think that we're going to need to have a bigger correction soon. It's been a long time since we had any sort of 10% correction. It's been basically a year since we revisited the 100 moving average, and if you look at the weekly time, it's just been straight up. We've barely tested this 20 moving average on the weekly time frame, really, since we had a little bit of a kiss here in March. But this market's just it's in the late innings, if you ask me. As far as that means, we have a deep correction or an actual bear. I'm not really sure yet. But I do think this market is overdue for some meaningful downside. But with that said, price is still up, the trend is still up, and I think that we may be putting in sort of a blow-off move. I talked about that on Thursday. They said if we close above 435.60 on the SPY, we'd probably go vertical Friday, and that's exactly what happened. So we may go up and test this upper trend line here. As far as this lower trend line, we have violated it too many times. We're just going to go ahead and remove it. It doesn't matter anymore. We don't care about that one. So this is the only one we care about right now is this upper trend line that could act as resistance. And also congrats to you guys who followed me in the VXX and took some profits on that Monday. Again, in this type of environment, again, when you get a good on the VXX, you got to take some profits off the table and you move your stop into the money or at break even. So if you stopped out on the second half fit, no big deal. We still made money on the first half, so congrats to you guys there. I still think there is a bigger move coming in the VIX as we get closer to August. So we'll be looking to re-enter this again. So just stay tuned for that. A chart I want to show you here. I'm going to go switch over to Twitter here. It's courtesy of Axel Rourke. So this is a chart that he picked out. And it's basically the S&P versus the percent of stocks above their 200-day moving average. And you can notice the divergence here, the past divergences that have played out. Namely, here's the one in 2018. And we had these small ones here that didn't really amount to anything, but the bigger ones amount to more sizable corrections. Obviously, the March 2020 correction, we had the correction in 2018 with that extended divergence. See how long it took. This one was a shorter divergence, but much steeper. And then we had this one here last summer, which did lead to a 10% correction and a lot of chop in the markets. This one is a massive divergence, and breadth is completely dropped off the map here, as you can see over the last couple of weeks. So it was starting to diverge anyway, and then it really has dropped off here. So this is a divergence that's eventually going to have to work itself out one way or the other. But I did see that earlier, and I did think that was interesting. I want to share that. That should, in August, September are historically the worst months performance-wise for the market. So it would make sense that we see some type of corrective move at least coming up here. Maybe this week's price action in the S&P was a bit of a preview. We'll find out. Again, we have to respect price. It is in an uptrend still. So again, we don't want to get too aggressive on the sell side just yet. But if I see anything change, I will let you know. Anyways, another chart I want to show you here. Pointed this out Friday. Dollar index. Been looking at this all week. So we did confirm now on the weekly time frame. So this is an actual, we closed above this inverse head and shoulders neckline. So the dollar may have upside up to 95, 94.50 in that area. And that's going to put pressure on the equity markets, as I'm sure you're aware of. The market has ignored it for right now, but I don't think that will last for very long. Now, we do have tech earnings next week, so the market may decide to hold up into that. However, it is very common for Apple, especially, and some of these other tech stocks, to run up into earnings and then sell the news. So that could be a bit of a catalyst, because really right now, FANG's the only thing holding this market up. I mean, we talked about Brett a minute ago. FANG, look at Apple. Apple's really holding the market up. Amazon's had a nice move, although coming back. Google has just been an absolute terror. I mean, this is just a ridiculously overbought chart. If you look at the monthly, this is just absurd. It's over 33% extended from its 20-month moving average as we sit right now, which is just insane. Microsoft also ridiculously overbought. So if these tech names start coming in, it's going to put a lot of pressure on the equity markets. By the way, small caps, Russell 2000 is not confirming any sort of breakout right now, and you want to see small caps lead in a bull market, although it did get back above this trend line on a weekly time frame, so the Russell may hold up for a little bit longer. Let's take a look here at crude. So crude had a big dump. You guys know I talked about this. I said, hey, you guys watch out, watch energy, be careful with energy right here, and we got a huge dump. Got right to my target very quickly. So you guys know I had this 66.60 area penciled in as support. We got right there, the 100 moving average, and we got a nice bounce off of that. Now, I'm not sure if crude ends up making a new high here. If the markets roll over, it's probably unlikely that that happens. But crude did get right to my first target here of support. And again, if it does reject this 20 moving average in this kind of choppy area, this will be resistance, by the way. But if it does reject that and it makes a lower low, then you're going to have your next pivot. It's going to be right here at about 61. We'll call it 61.50. And if you get through that, your big support level is going to be right in here at $57 and change. So that's kind of the outlook right now on crude. I don't think it gets much higher right now, although I could be wrong. As far as making a new high, at least in the near term, I think crude's going to have to do some more backing and filling to get there. All right, so let's just quickly move on to gold and silver, and we'll wrap up here. So gold, nothing terrible on the daily chart. It does look like it's consolidating a bit, somewhat bullish. You have all these test candles. Notice the tails here. It's pushing up. It's kind of, the dips are being bought, at least on an intraday basis. The problem with gold right now is really on the weekly chart. This is a bearish inside bar, so we may see some pressure in the precious metals. Silver, kind of the same deal here. So silver had this bear flag here that broke down. It's holding this trend line for now, but again, we talked about this last week. This is not a trend line you want to buy. It's done too much consolidation right above that. It means it's building strength to move lower. So be patient with the precious metals right now. We will get a chance to enter them, but it's not right now. So we're going to just be patient with this, and we don't want to be buying at this area. They're not giving us any sort of signal that there's any strength in the sector right now. Of course, if that changes and they start to show that they're ready to reverse, then I will let you know. But at this point, we just leave them alone and let them do their thing for now. All right, guys. I think that's it. I just want to keep it short and sweet this week. And yeah, we're just going to look for pattern here in the market. If we get a high volume reversal and we get follow through to the downside on the S&P, this market should be cooked for a decent pullback here. But outside of that, I've got nothing else for you, and we will see you next week on the chart.